Hello and welcome. It's time to take a look ahead at what could drive the markets this week. I'm Kelly O'Byrne and I work on the dealing desk here at LCG, and I'm joined by our senior market analyst, Jasper Lawler. Now, Jasper, it's the start of the third quarter in 2017. In general, does moving into a new quarter make a difference for markets?
It certainly can do, and I think probably the biggest effect is the way portfolio managers are changing the composure of their portfolios, and they typically do that at the end of the quarter. And so I think there have been some portfolio shifts going on. So it wasn't right at the end of the quarter, but we certainly saw a move out of tech stocks, big sell-off in the Nasdaq index. Obviously, some of the big companies out there, Google notably, after it received the fine from the EU last week. And then you could say there was quite a broad sell-off. The FTSE sold off, the DAX sold off near 1 month lows. So arguably a shift out of equities in general into other asset classes, like maybe just cash or bonds. We've had a good run in equities, so from a kind of profit-taking standpoint, makes a little bit of sense there. Or maybe just a shift out of European equities. You could say there's perhaps Donald Trump has ridden out a period of difficulty, and maybe there's a reason to move back into US stocks, or maybe sometimes people just move into the US because it's deemed a little bit safer than other parts of the world. So certainly towards the end of the quarters when you start to see those movements happening, and it typically, you could broadly say that maybe the sector or the asset class that outperformed in one quarter, and this applies on a yearly basis as well, you can maybe expect that to underperform in the next quarter.
Yeah, thanks for that. So let's talk about the euro. It just broke right out of there.
Yeah, well, I think we've been generally pretty positive on the euro, and we've been talking about the fact that really the ECB needs to get more hawkish on inflation and needs to start pretty quickly talking about tapering QE. And last week they really came the closest that they've come yet, about almost admitting it. They've been treading this line between growth in Europe is looking really good, whereas inflation is maybe a bit more lackluster. But Mario Draghi, even himself, towards the end of last week, basically inferred that actually that QE tapering discussion needs to happen quite soon. And so we've broken out of that last short-term resistance, looking at the euro-dollar chart. Now we've run right into kind of the major range resistance, and so this is the big level that counts. If we can move beyond here, 114.50 to 115, I would say is the top of the range. Once we get through those levels, that's really a long-term breakout and some evidence that we've got a base in the euro.
Yeah, and the pound jumped too. Is that just the dollar weakening and also the Bank of England inflation hearings on Tuesday?
Yeah, I mean, that would make sense, wouldn't it? That, you're seeing the euro and the pound breakout, so the common denominator obviously being the dollar. But I actually don't think it is that. I think it is coming from the fact that the Bank of England, as you said, we've got the hearings next week, which will definitely be interesting. In the Bank of England, there was obviously 3 dissenters to keeping rates on hold, 3 people who voted for a rate hike. Then we heard the chief economist, Andy Haldane, who has a speech as well on Tuesday, I believe, we want to watch out for, versus Mark Carney and John Cunliffe, who are the governor and deputy governor. They both have said now is not the time to raise rates. So there's becoming more of a balance now at the Bank of England, more of a balance at the ECB. And the Fed have hiked rates. I think there's about 50-50 chance they go again in September at this point. But that's kind of a steady, known entity at this point when you're talking about the Fed. And I think it's these other central banks that are changing it. And another reason to think that is we saw a big breakout in dollar yen, euro yen as well as part of that euro move. But dollar obviously moving up against the yen. The Bank of Japan have not yet kind of joined this kind of tapering party yet, which is some evidence as to why the yen is still weakening.
Yeah. So it's non-farm payrolls coming up. What do you expect there?
Well, we're going to put up the market expectations on the screen now from our economic calendar page on LCG. Generally speaking, I think what you could probably say looking at this chart is there's a bit of a kind of downtrend in the number of jobs being created. Now, obviously, we could see a good result, good not. It's really a flip of a coin, to be honest with you, month to month. But I think the overall trend, if you're looking back 3-6 months, is that actually less jobs are being created. But the Fed are raising rates. Potentially that's an issue. Maybe the US economy is slowing at a time when monetary policy is getting tighter. That's not really a good scenario. But I think what probably most people are thinking here is that actually the US is reaching full employment. So i.e. if everyone's employed, obviously you can't hire as many people each month. It's not everyone that's employed, obviously, but it's kind of as close as the economy can really get. So it's understandable that less jobs are being created. So hence, I think the emphasis is on the wage growth, because that obviously has meanings in terms of inflation.
Yeah. And is there any other data to look out for this week?
Yep, I think probably back to the Fed again. They've got the Fed minutes on Wednesday, so that's always a key one. Obviously, the market's a little bit undecided right now exactly where they stand in terms of going again in September. The statement and what Janet Yellen said at the last press conference were more on the side of suggesting that September's on the table, but market doesn't fully believe it yet, just because of the economic data has not quite supported it. So those minutes could make the difference. That would be big. And then generally, also part of the kind of European growth picture, also China and the UK, we've got a lot of PMIs out next week, so they'll all play a part.
Yeah. Now, Jasper, your crystal ball wasn't giving away very much on oil last week, but you did say it could be the bottom because of strong technicals. Are we looking at a bit more stability now in oil?
Well, yeah, let's stick with the technicals, because we've harped on about the fundamental picture so much, so I think everyone kind of knows it by now. Technically, for me, I think US oil is actually quite interesting. So on the chart at the moment, I want to show a weekly candlestick chart, and you can see that trend line is pretty clear cut. It doesn't get this obvious that often when it comes to technical charts, and you can see a clear breakdown of the price. To me, that's bearish. You can see on the RSI level as well, a breakdown through the 45, which was consistently support. We've broken down through there. Bullish case, arguably 43 is a big level, because that's where we dropped down to right when oil was very weak at the end of in around 2014. But if we get through there, I think maybe the next big level, the next kind of drop that we got to, which you can see circled on the chart as well, is that 38 in US oil. So that's maybe the next major support level if we do get through here. And my inkling is to think that we probably do.
Thanks, Jasper. Please don't forget to follow LCG on our YouTube channel, where you can find our latest videos as they're released. Thanks very much, and best of luck trading.